Hi all. Nifty has crashed more than 3.5% today. I know if you were not watching the markets, this 3.5 number might not seem huge and Nifty has reached the levels only of February. But if you were a trader and you watch how the market opened today morning, you would have actually been very scared. So Nifty indicated a 5% gap down, and even in the pre-market open, it was showing 7%, even 7.5% down. But after all that, throughout the day, Nifty has recovered quite slowly, and by the day's close, Nifty is now at nearly 22,200. That is the level which we are talking about. So why is all of this happening? The US tariffs announcement came on Wednesday, and it caused a massive crash in the markets, even in our markets on Thursday and Friday. So if you're looking at the events that unfolded after that, on Friday evening after our markets closed, China announced a fresh tariff against the US. They said that, hey, Donald Trump, you've imposed a tariff on us. That means anything that China is exporting into the US, they're going to charge an additional tax on it. So China said, hey, let's be fair. So China is also going to charge a tariff. Instead of bowing back down or backing down, China is also going to impose a retaliatory tariff on the US of 34%, and this sent the entire global markets crashing. So the US markets crashed on Friday night. Even today, the US futures are indicating a further 3 to 3.5% gap down at opening, and along with it, the Chinese markets have seen one of its worst days since 2008. Yes, 2008. It has fallen by 8%. Hong Kong is down by 13%. Japan is down by 8%, and even Germany is down by 6%. So global bloodbath. Among that, Nifty or our Indian markets not falling by that much, only falling by 3.5%. But it does not mean that we are out of danger, and that's exactly what we are going to discuss in this video. I have a few pointers here. First, we'll discuss some parallels to the 1987 Black Monday crash. So that's what we'll start with. Then we'll go to what is happening this time around. So 1987, what happened and what is happening this time around. And then we'll go to few conspiracy theories, why Trump is actually going into this tariff war or trade war, and the outcomes of which will be very interesting to you. And this outcome, if it is true, if these conspiracies are true, will indicate that the market is going to see a mother of all bull runs in the very near future. So make sure you watch till the very end. As always, this is Ajay Ajith. Welcome to Market Feed. So the Black Monday of the US stock market is said to be October 19th of 1987, where Dow Jones, the key market index of the US, fell by more than 20%. Imagine that fall. Nifty has fallen only 3.5% today, and everybody is panicking. So on a single day, the Dow Jones and the S&P 500 fell by more than 20%. But the interesting fact here is there were a lot of things that led up to that event, and a similar timeline was followed from Wednesday to Monday. So if you're looking from 1982 to 1987, there was a huge bull rally in the US market. The equity markets more than 4x'd. Right? So what was the Dow Jones at in 1982? It was around 700 points. That was where the index was. By the end of 1987, it had reached 2,800 points. Imagine the kind of returns that investors were making at that time. But along the same time, a lot of problems started happening. One, yes, the interest rates in the US started shooting up. It started to touch nearly 10% because of the inflation which was happening. The US central bank increased their interest rate to 10%. Even today, the US only has reached or touched a maximum interest rate of more than 4 to 4.5%. So during all of this bull run in the stock market and the real estate market, the US saw that there were certain problems in both its economy and other economies and other large economies of the world. So they went into something called as a Louvre Agreement of 1987. So in February of 1987, all of the developed countries in the nation, including the Germany, France, US, Japan, all of them came together in Paris and decided on an agreement which will end up with US decreasing its trade deficits and other countries around the world to cut their interest rates. They agreed that, hey, the US dollar is too strong, that is hurting the US exports into all of the other countries. So they said that the US currency will be devalued, and from there they had a complex set of rules which included other developed countries keeping their interest rates low. But on the Wednesday, the previous Wednesday of this Black Monday crash, Germany decided to increase its interest rates, going against what was decided by all of the countries. So this started what was called as a currency war at that time, and retaliatory measures were taken by all the economies, right? Which included a strong statement by the US on the weekend, right? So Wednesday something happened. The US trade deficit numbers even started expanding, and it was announced on Thursday and Friday. And by the weekend, the US said that what Germany had done was very, very wrong, and they put out a very strong statement against Germany. So on the Monday following this, the markets definitely did not like the uncertainty which was happening in the global markets, and the US stock market crashed by 20% in a single day. That is what is called as a Black Monday. So some some common themes which we can draw between 1987 and today. So similar to 1987, something happened on the previous Wednesday, which was Trump announcing the tariffs on all of the nations. And over the weekend, something similar happened, right? A strong statement by China saying that we won't back down and we'll impose retaliatory tariffs on the US. So that is it, right? That is the only common theme between 1987 and today. So even then the stock market crashed, but by a much higher number. Today also the market is crashing, but by a much smaller number. So if it was 20% then, today it's not more than 5 to 10%. So understand the difference here. But both are man-made or policy-related crashes which happened in the market due to two countries across the world fighting not actual wars, but wars with either currencies or trades, like what is happening today. So just like what happened in 1929 and even 1987, the US government is now observing that huge trade deficits are happening between the US and other countries, and the dollar is too strong. That means whatever the US is exporting, it is not very interesting in the global markets. So the similar situation to 1987. So this is what the US is trying to avoid. They're trying to decrease this trade deficit by putting a harsh tariff on nations across the world. That means if I'm buying from you, make sure that you buy something from me in exchange, right? So a tit for tat move that could improve the relations, or that could improve the trade deficit for the US. Yes, it is very selfish, but I think they have the bargaining power, right? They've shown over the last multiple years that the US is a powerhouse and they have the bargaining power, and they're trying to bank on that. They're trying to make sure that they double down on their bargaining power and come out strong. So in the case where Trump is actually going down this path, there are nations like India, which are being called as green nations, who are friendly to the United States. There are nations like China who are against the US, who are going against the policies of Trump. And there are neutral nations, including the European Union, which as of today, they're still planning, hey, what to do against Trump, right? Are they going to impose retaliatory tariffs? That means the market will fall even more. Or are they going to just accept and give their way into the negotiation talks? So by all of this, I think Trump is trying to bring everyone into the negotiating table by giving a hard reality check. Something very difficult has to be imposed for everyone to come and carry out a negotiation. That is what Trump believes. So that is what he is doing right now. But interestingly, what is happening today is very similar to what happened in the US more than 100 years ago, or almost 100 years ago. So in 1929, I'm sure you should be reading about much more about this. Something called as the Great Depression happened in the US between the 1929 and 1939. So what was happening? Let me see if you can relate. So there was a period of economic prosperity just before that. The stock markets were rallying. Everyone was making money. And after this, people started speculating in the stock market. Banks started lending quite a lot, which led to unnecessary spending. And at the end of this cycle, by 1929, jobs were lost. The country was able to manufacture quite a lot, but there were not much people to buy it. And in the end, it caused a situation where people were not buying enough goods and services, which caused a lot of jobs to be lost, which in turn led to the crash in the stock market prices of all of these companies. So in this scenario, in the 1930, the US came out with massive tariffs right? So yes, the word that is being used today was used in that time as well. Tariffs on any imported goods were introduced in 1930s, and this led to a huge depression or a huge economic slowdown from 1929 to 1939, which is called as a Great Depression. The US market crashed by more than 90% and only recovered after 1954. That is more than 25 years later is when the markets recovered. So you understand, right? A situation where economic conditions in the country is not great. The leadership or the government comes up with an unsustainable policy, and that crashes and that causes an entire fall in both the economy as well as the stock market. So I hope you see the parallels. Today also, when Trump says, hey, we are being cheated by other countries, tariffs need to be implemented. That means import duties or import taxes need to be implemented. I think there is a world where this sort of situation could happen if he is not very careful. And a slowdown in goods transactions across the world could be seen. Right? So goods transactions, because tariffs today are not really applicable on services. That means the Netflix subscription that you're taking today, or even the IT services import and export from India to other countries, they're not really affected. It's only the transfer of goods between countries that is being hugely affected. So now that you understood what is a Black Monday, some situations even before 100 years which cause a similar market fall, I think we should get to the one statement that always a market follows, which is the market does not like instability. So whenever there is uncertainty or instability, the markets tend to fall. And that is exactly what we're seeing today. In fact, it is not even a huge fall as of today. If you're looking at Nifty and its performance over the last 25 years, there have been 69 times where Nifty has fallen by 5% over the last 25 years. And today is even not at that level. A fall of only 3.5% is what we are seeing today. I would also like to discuss few conspiracy theories, which if true can be very significant. So there is this discussion going around, hey, is Trump doing all of this very intentionally? So he's talking about trade deficits, which happened both in the 1987 and even in 1929, right? He's talking heavily about trade deficits. He's talking heavily about tariffs, which were again a hot topic in 1929. And yes, Trump and his team, they're also talking about the huge unfair situations that are unfolding against the US in the global markets, right? So that is the situation where we are at today. And the conspiracy theory, and again, you don't have to be a crazy market expert to know this, because there is Mr. Ray Dalio. He is the chief investment officer of the world's largest hedge fund, right? So Ray Dalio has been running an ad on Instagram. If you've got it, let me know in the comments down below. So in this ad, he says that the US national interest payment, right? Only the interest component on whatever debt that they've taken, the national interest payment is going to touch $1 trillion this year. So imagine that number. $1 billion is 8,000 crores, more than 8,000 crores as of today. Imagine what $1 trillion is. It add 3 more zeros there at the end. That is more than 80 lakh crore worth of rupees every single year just on interest payments alone by the US government. And Mr. Ray Dalio and other prominent economic advisors to the US government has said that this is very unsustainable and they have to do something very serious. So at this time, why is this such a hot topic? Because the US has had huge debt over the last multiple years, even the last 20-30 years, right? At this time, it is being discussed very seriously because over the next 1 year, the US has to repay more than $9 trillion in debt. Again, remember, $1 trillion is nearly 80 lakh crore Indian rupees. So again, $9 trillion in US debt has to be repaid over the next 1 year. Again, this is not a big deal. What governments do is they issue new government securities whenever they want to repay their debt. So imagine you have taken a loan from me of 1 lakh rupees. And hey, I come asking you for that 1 lakh rupees after a few years and you tell me, give me a fresh loan of 1.2 lakh rupees. So I'll close the old loan and hey, you're going to get more interest over the coming years, right? So that is what essentially every government over the world does. But one small thing has changed for the US. So the US took most of these debts that they're owing now, especially during the pandemic, where they had a very low interest rate. But as of right now, the US 10-year Treasury bond yield is somewhere around 5%. So, when the government is going to refinance their bonds, it's going to be very, very expensive to do. They're going to convert a lot of cheap loans into a lot of very, very expensive loans. So, the conspiracy theory states that, hey, Trump wants to create a recession in the US economy so that the Federal Reserve, will be forced to decrease the interest rates. And Trump can refinance all of this debt at the lower interest rate. Okay, I know it's sort of a difficult concept and it's a conspiracy, but this is where, if it happens, Fed cutting the interest rates and all of these situations likely going away means that the mother of all stock market rallies is what could follow. So if you want to read more about this topic, you can read this document by Mr. Stephen Mirren, who is the chief of the Council of Economic Advisors of the United States. So he has published a 40-page article which is called as a User's Guide to Restructuring the Global Trading System. So in that he talks about, hey, there are a lot of things we can do to refinance this debt and cause our make the situation much better for US in the long term. But for all of that, we would have to suffer a few short-term consequences. And in one of that, he explains, hey, tariffs are away. He explains, hey, a recession could be away, right? Indirectly hints to it. So all of this situation is being properly discussed in that document. So again, in the Indian context, you can imagine this to be a chief economic advisor to Prime Minister Modi, right? That is what this person is to Donald Trump. So if you are to go by what this document is saying, it's going or it's aiming to a new financial order in the global economic system. And for all of that major changes to happen in the world, something has to break. Right? And in that something breaking, as Mr. Uday Kotak has said, some giants will fall and some new players will make a lot of money. That is what is expected to happen. So as the saying goes, to become spring, that means you have to first accept the risk of being winter. So the spring is a time of happiness, a time of prosperity across the world. But if you want to become the spring, if you aspire to become a happy, prosperous nation, you have to go through a winter first. You have to go through a lot of tough times where things won't grow because of the snow and the lack of resources. Yes, all of this can be stupidity also. There might be no plan, no targets to achieve, just blind hatred for all of the neighboring countries, which forced Trump to actually come out with the tariffs and cause a massive market crash. Him not understanding how global markets work, how global economies work could be a reason. But yes, there is also a theory that he knows what he's doing and this is kind of the direction in which he's planning to go. If yes, then what do you have to do is the question now. So what should investors do right now? Yes, so your investments, if you have done lump sums, could be in loss. That is understandable. But it is going to be one of the worst time to stop doing your SIPs. Again, if you do not have a particular time frame in mind, if you're investing for your retirement goals, that is more than 20-25 years away, continue to invest into the market. That is going to be a bright idea because you'll be able to catch a lot of averaging action. Market down in the red means that you can buy more quantity with the same amount that you're pumping in. If you're a new investor, be cautious. Do not take any sudden decisions to invest today or tomorrow. This could be a multiple months fall if things are the way they are right now, and you'll get a lot of time to plan out your investments. So make sure you treat the situation with a lot of respect. And one major thing that I want to highlight here, it is said that you as an individual, you'll be getting 4 to 5 opportunities across your lifetime where the market crashes so big that you'll be able to build wealth from it. So whenever there is a bull run, you make money. But whenever there is a bear market or whenever there are huge crashes, you'll be making true wealth. Right? So yes, there is an opportunity. So if you're able to choose out this opportunity very intelligently, I think you'll be able to make a lot of money even in this market fall. Yes, this is Ajay Ajith signing off. See you all again in the next video. Bye-bye.